Well, we're very happy to have with us on a Friday afternoon Adam Smith from Ironbridge Property Group. Now, Adam, what's your official moniker? Because you're a man with different hats and multi-skilled. So, what do we call you?
Yeah, Adam Smith is correct for a start. But yeah, I'm the managing director of Ironbridge Property Management in our Auckland and Wellington branches. My sister Pam Marshall's the managing director of our Christchurch department. We're family-owned business. Father in the business as well. Started in Christchurch, and I'm also the principal officer of our real estate business as well. So we've got two branches in our Auckland and Christchurch branches. So yeah, you're aware of a few hats. Not too many, I hope.
Fantastic. And actually, folks, that's why we want to get Adam in today, because there are other firms that claim to be family businesses, but we felt that this was a real family business that we're dealing with that's big enough to have a view nationally, but also connected enough that we got some real feedback from people who are on the ground, as it were. So we're really happy to have you with us today. Thanks, Adam. We won't call you late for dinner. We'll just call you Adam, all right? Call me anything you like, so long as it's not late for dinner. Now, there's four things we want to chat about today, which is market trends, to sell or not, things to be aware of, thinking about diversity in your portfolio, and a new thing, compliance managers. So maybe we can just sort of, start with the trends. You've got this really good perspective across the country, and whether from the property management side or the real estate side. What sort of things are you seeing on the coalface or on the ground with your clients here, Adam?
Yeah, I mean, at the moment, the rental market in across the three main centres that we operate in is quite buoyant. It's quite strong. There are very good demand for, especially like your family homes, your 3 and 4 bedroom quality family homes in good areas. We can't get enough of those at the moment. They're very strong. There's the 1 to 2 bedroom sort of apartments and townhouses. There's still decent demand for those as well. We're seeing, having spoken to our Wellington branch manager, he was talking about it's very buoyant in Wellington at the moment. The rents are up. He's probably getting 10% more than we were last year. Christchurch market's very strong. We're in lockdown in Auckland's a bit different. It's a bit hit and miss depending on where it is. Obviously, if you're central city apartments, that's hard work. But the rest of it's still pretty good. But I know in Christchurch, there's a lot of people moving to Christchurch from Auckland and from the North Island in terms of the affordability down there. I believe it's been coined down in Christchurch the mainland drift at the moment, in terms of a lot of people can work from, still maybe maintain their job in the North Island, work from Christchurch, live there, better, in terms of affordability with housing. So yeah.
Okay. So for the petrol heads out there, a mainland drift is not someone from Auckland doing a sideways slide in their vehicle. It's the general move down towards the South Island. I'm just going to define that there. Now, just while you're talking about things being, buoyant. So what? Just to define that, we're seeing that rents are tracking quite high, or there's a huge demand, or both.
A bit of both. I saw that the latest Trade Me stats came out earlier this week, and it was up for September, 4.9% across New Zealand, and we're seeing now, I think, across the three centres, that or more would be what's happening at the moment. In terms of the rents are definitely trending upwards where we can. I mean, not all properties are getting rent increases, but where we can. That we're getting, that sort of 5% mark or more, I would say. So, which is good, especially with the costs for landlords going up. I guess it's making it harder for tenants, of course, in terms of their affordability. But there's normally a good selection of applicants for each property that we can choose from.
All those comments are really good. So yeah, and obviously it's on the minds of people. Look, on the one hand, landlords, those with investment property, we certainly haven't seen the ogre greedy landlord that they've been made out to be in the press, shall I use the word demonised, perhaps over the last 6 months. Most people, it seems, they're just trying to do something for their retirement. Money in the bank is worth nothing, so they're looking for some sound investment strategies, and obviously property is one of them. That being said, as interest deductions are being gradually taken away from existing rental houses, then pragmatics have to take effect, which means rents at times need to be adjusted. And I guess, Adam, to the property owners, would you recommend that regular smaller increases, it can only be annually anyway, is better than doing nothing and then one massive hit of rent? Do you have a recommendation around that?
We would recommend more consistent increases than one big one, and like you leave them alone, the tenants, you leave them for 2 or 3 years and then you put it up by $60-$80 a week, or more. That can be hard, and we are still, we're always recommending to our owners what we think the rent should go to, and then it's up to them whether they want to do that. And a lot of owners are still actually going, look, our good tenants happy to leave the rent where it is or only put it up a little bit. And when our job's to recommend it, it's up to them what they want to do with it from there. And whereas there are other landlords though who are very much, I need to get the most I can at the moment because of the extra costs with getting the property compliant with healthy homes, the interest deductibility that's coming in and being phased in from now. So, that's, as you say, you can only increase the rent now annually. So it's about having good processes in place as well to ensure that we are checking that as soon as we can and employing and ensuring that we've got a good rent review system in place so that when there is an ability to get a rent increase, if it's not today, at least look at it again in 6 months and see how it's
Yeah, okay. And that's a good point I hadn't thought of actually. I guess the independent assessment from the property manager is part of the value, isn't it? Because you as a property owner might have an idea, but how in touch are you with the reality? You really are going to benefit from that independent expert assessment from yourselves who are doing it all day, every day.
Well, when we're renting, tens of properties, a week, if you like, you're seeing that trends develop quickly in little pockets of subdivisions or areas where it's like, look, okay, that we could probably try another $20 or $30 a week on the next one that comes up based on how quickly that last one rented. And there are sort of trends that or stats that won't come through into the third-party sites that show that up until months to come. So that's there's a lot of that happens where it's like then also people who missed out on this house, we can just often even off market rent a home to them without ever going online because we've got a really good candidate that missed out. We can just put them straight into the next property that comes available.
Right. So some good points because they're the value. I think most of our clients are using property managers because they're busy professional people, but that probably highlights something I hadn't thought about, even though we've been doing this for years, the value add from a property manager, and that's kind of part of what you're paying for. And I know we're going to talk a little bit later too about the compliance benefits, and that's certainly got a lot more complicated than it used to be. Let's move on to the second thing, that's to sell or not. Now, obviously, from an accountant's point of view, we're looking at the numbers sometimes and saying, okay, well, yeah, this is going to start costing you. We think you're out of bright line now. We think you should consider selling and getting into a new build. However, there are other factors to consider, and something you'd mentioned earlier caught our attention. Would you mind mentioning that again to us, and for the benefit of our audience?
Well, we've come across a couple of clients already. I've spoken to just this week where the advice has been to sell and buy a new build, which makes sense on face value. But with the tightening up of lending criteria at the moment, the risk is that they sell their investment property that they've got now and then cannot get back into the property market at that same level that they were once. So they might own a 3 or 4 bedroom home in a good area, and they can't get like for like with a new build because the bank won't lend them the money. With rising interest rates and the tightening criteria, if you talk to most brokers at the moment, it's pretty tough out there to get loans across the line.
Yeah. Okay. So that's a big deal, isn't it? Because I think it really underscores the value of, yes, chat to your accountant, preferably one that specialises in property because that's a lot of complexity, but chat to your mortgage advisor, chat to your property manager so that you're getting input from a group of professionals with their diverse viewpoints and your best interests at heart.
You don't want to find out that you can't buy another investment property after you've just sold the only one you had, or you wanted to buy more. So yes, it's about getting that surrounding yourself with a good team of people that can give you the right holistic advice.
Yeah.
Because the accountant's giving sound advice by saying probably sell and worry about because what it's going to cost you, but they're not sure about maybe the lending ability of the customer, and maybe it's better to hold the property for the sake of an extra $100 a week to service the loan, or service the property, instead of having no investment property at all.
Right, because in the big picture, if that's $5,000 a year, if you're putting $100 into the bank, you're certainly going to get it's going to lose value. So that's a key thing. Interestingly enough, I was chatting to Rupert Goff from the Mortgage Lab just a couple of weeks ago, and he pointed out, each month you have to have a certain amount of uncommitted monthly income, and that's what the banks are assessing. But what you could borrow, say, previously based on $500 uncommitted monthly income, now you need $1,200 to borrow the exact same amount of money. So certainly it's got harder, as you say, to borrow money. And we know why it's doing that, why that's been done, but by the same token, the impact is on our clients. So I can sympathise with sort of both points of view. So that's a really good point that you've raised there. In terms of, I guess, diversity in the market, this is sort of the third thing we want to talk about. Yes, you might have property, but our concern is sometimes there's already a property in one city. Do you have any thoughts there, Adam?
We're seeing more and more Aucklanders, probably from an affordability point of view, buying outside of Auckland, more investment property outside of Auckland, because look at Christchurch at the moment. I think that's been undervalued compared to the rest of the country for some time now, and that is catching up, and catching up pretty quick. But when you can still buy a 3-bedroom, 2-bathroom brick and tile home, brand new for $700,000 or $800,000 in Christchurch, on a 400 or 500 square metre section, that'll still rent for $550 a week. It's people, Aucklanders especially, and people out of Wellington as well. We're hearing more and more going, I'll have a piece of that, thanks.
Yeah, that's pretty compelling.
I also think it's important to diversify regardless, anyway, across different regions rather than having all the eggs in the one basket.
Do you think there's any risk that the particular areas like Christchurch, for example, are going to become saturated with one form of dwelling, and that investors maybe just want to really make sure they're doing their due diligence?
There is probably a risk in Christchurch, not at the moment, but maybe down the line of the oversupply of the maybe coming of the 1 and 2 bedroom terraced apartments and townhouses in Christchurch. There is a lot of those happening and being built at the moment in that sort of city fringe and suburbs close to town. There's probably only so much capacity Christchurch has for that. But at the moment, it's still renting well and it's fine. But that might happen.
So if the budget would allow a 3 or 4 bedroom house, and obviously it depends on how much the bank gives you to borrow, but that's generally going to be, I guess, a little more resilient than say that 1 or 2 bedroom. 100%.
I think in the end, the capital growth as well is kind of based on how much land you've got. I think, and that's where if you've got freestanding or townhouse, you're probably going to go a bit better. And who the old story with these things too is who is your on sale, who's your second-hand market too, if you were to sell it, and if you've got more of that, then there's going to be increased value as well.
Yeah, okay. Well, that definitely makes sense. And wow, those numbers, yeah. Because thinking what you can buy up here, it's like, wow, okay, yeah, that's just not going to happen in Auckland.
And we are seeing, Gareth, as well, people who might consider buying a home and investment property in Auckland, but instead of buying two down in, say, Christchurch, or at least a mixture of things down in Christchurch, or diversifying into something else in Auckland, but having another property in Christchurch. So, yeah, just these options. But yeah, it's been interesting times for Christchurch because they've gone through, the earthquakes and that, and the oversupply and undersupply of as the red zone had happened. But they're coming out of that strong right now after being flat for a long time. And I think there's maybe a bit of confidence from the rest of the country that it's safe to invest in Christchurch. People in Canterbury knew that, but now the rest of the people are saying that that's fine, cheap money. The houses are relatively cost effective, so let's get in.
Makes sense. Lastly, we just want to talk a little bit about compliance, because it seems that our property manager role is changing or is enlarging, and especially as the I won't say red tape, but maybe the requirements for landlords have certainly, the ante has been upped to the benefit of tenants. Do you have any comments on that particular field?
Red tape's probably accurate, but the days of just managing the property and looking after the tenant and doing quarterly inspections and that's gone. There's so much more involved now, where more and more I think we're going to become a compliance manager as much as a property manager to ensure that the property is compliant with all the issues around healthy homes. There's the new the RTA, Residential Tenancies Act reform, that came into place in February, biggest reform since 1986. So there's so much involved there to unpick, and there's still process and policy around it being set up as we go along, because it's in terms of case law and things happening as landlords or tenants work things through. So it's been interesting. It's going to be, overall it's better for the industry, I think. I mean, the industry itself is unregulated, which I think will become regulated in time. I know our teams are working through getting qualified to ensure that we're ready for that when that does come. And that'll still, I suppose, flush out others. You can still turn up and become a property manager, with an Excel spreadsheet and a $500 website, and away you go. So there's no sort of, there's no regulation. So there's no auditing of trust accounts and those sorts of things. So we audit our trust accounts, but it's just there's just, how do you know? And we have a lot more support, admin support around our property managers now than we've ever had, because of that compliance that's required. There's a lot involved.
Right, and so that's, I guess, good to think about those pressures. You might see me reaching for my pen before, because one of the things that had come to my mind when you talk about compliance is, healthy homes, once you've got it to standard, is that it? But I guess what you're also referring to is that's probably there'll be ongoing adjustments to ensure it's something maintains its standard, but also there's a lot of new detail around the law and making sure that you're not doing this or you are doing that. So there's more than just one aspect to this. Am I right?
And a lot larger fines if you get it wrong as well. They've really ramped those up. So you've got to be on the mark. And tenants are more and more educated on all of this at the same time, and which is great, and as they should be. So it's that landlords can't sort of cut corners like maybe they were able to in the past if they were that way inclined. So you've got to be doing it by the book as best you can, and learning as we go.
Yeah. Well, look, it's really good to hear those insights. And look, honestly, there was some points that are new to me today. It's like, okay. Yes, I'm really glad to have a few minutes of your time. Adam, Ironbridge has got property management in Auckland and Wellington and Christchurch. So how do people get in touch with you?
Our website's ironbridge.co.nz, and we or email property@ironbridge.co.nz. We've got, on our website, we've got the different contacts for each branch. We manage the properties across the regions of Auckland, Wellington and Christchurch, so citywide. And so I've been doing that for, what are we now, 17, 18 years, family business. It's been a journey. It's been good.
Well, that sounds great, and we'll have the link to the website in the blurb below. One thing I'll just mention ourselves, and I've got no paid incentive to do this, there's no kickbacks or anything like this, but just ourselves, we have observed Ironbridge on a number of occasions really bend over to help clients. It's not always been financially that, viable, but we've just seen Ironbridge really care for some of our clients, particularly some vulnerable landlords. You might think, is there such a thing? Yeah, there is. Some who are got some quite severe health conditions and have needed a lot of help. And I've just been really impressed, the ethos of Ironbridge is not actually just all about this. It's actually about people, and you don't always see that. So genuinely, I've been quite surprised and impressed by how you guys do things. So hand on heart, that's our no strings attached recommendation. Just you see what people are like, and we've just generally, as the years have gone past, thought, okay, wow, these guys at Ironbridge, they're nice people. Yeah. So anyway, that's my 2 cents worth, Adam, on what we've observed in the wild.
Very generous, thank you. I mean, I know one thing people say, who are you looking for? If you're looking to recruit people, the first thing that Pam and I talk about is we want to employ nice people. That's one of the first things, and then we can, if need be, we can train the not teach the knowledge and train the skill. But if they're nice people, then you're most of the way there.
Yeah, well said. Well, look, thank you so much for your insight and your valuable input today, and we look forward to touching base with you in the future, Adam, and wish you every continued success.
Thanks, Gareth. Thanks for having me.